So a few days ago, AMC announced that they were buying a gold mine, which had the whole world saying, what? And as I dug into this story and I peeled back layer after layer of convoluted mess, I am left scratching my head wondering what is going on with this deal. There's a lot of different ways you can look at this, and there's a lot of shenanigans going on all different sides here. So grab some AMC popcorn and get comfortable, because this thing reads like some kind of twisted Wall Street Reddit telenovela soap opera. Now, as we get into this, keep in mind, the whole world is sitting here asking, why would AMC, a movie theater company, why would they buy a gold mine? And nobody is asking, why would AMC buy this gold mine? So first, let's talk about the story. A couple of days ago, AMC announced that they were taking out a 21.6% stake in Hycroft Mining, ticker symbol HYMC. And in the same announcement, we learned that Eric Sprott was taking out an identical 21.6% stake in the company. And between the two investors, we're looking at just under a $56 million investment. Now, the involvement of Eric Sprott is very interesting, and I should note that Eric Sprott is the same owner of Sprott Investments, the Sprott PSLV Silver Trust. Okay, Eric Sprott is a billionaire precious metal investor who owns a lot of different businesses. This purchase was made under Sprott's personal investment company, not the PSLV or not Sprott money. Now, let's first talk about the macroeconomic situation. We live in a very inflationary environment, and gold mines are one of the most undervalued assets in the world right now. Obviously, the price of gold is on the rise as the value of the dollar goes down. So on its surface, buying a gold mine is not a terrible investment right now. It's actually a pretty good investment. And AMC, after a large influx of ape cash last year, is sitting on a decent stack of dollars it needs to keep a cash-burning operation alive, but dollars that are also being whittled away by inflation. So preserving some of that wealth by buying gold that's still in the ground, not a terrible investment. But again, that doesn't answer the question, why this mine, all right? And this mine does not exactly have a squeaky clean history. There's a lot of shenanigans going on at Hycroft. More on that in a minute. Now, ever since this deal was announced, I've been seeing a lot of talk in traditional finance media like CNBC and Motley Fool, calling Adam Aron a clown, calling him a crook. And I have to say, when I see Jim Cramer on the air talking about how this deal is embarrassing and this is a clown show, I always have to wonder, where are Jim Cramer's interests lying? Where is CNBC's interest lying? Because when people go on CNBC and they talk about deals, you never know which side of the mouth they're talking out of. Half the time, these guys are out there advertising the other side of a trade that they're taking. Sometimes they're just shopping their book. It's impossible to say. So take everything you hear in traditional finance media with a grain of salt. And also keep in mind, Jim Cramer is the same guy who told you to buy Bear Stearns stock a couple of days before their bankruptcy. And Jim Cramer also brought Elizabeth Holmes of Theranos fame onto his show, where he pined over her and gawked at her like some kind of Beatles fangirl as she talked about changing the world in her fake baritone voice. So when you see Jim Cramer on TV calling Adam Aron a clown or calling this deal embarrassing, keep in mind there's a lot of pot calling kettle black there. Now, real quick, I want to talk a little bit about Eric Sprott and his involvement in this deal. First of all, Eric Sprott being involved in this deal does bring a little bit of precious metal street cred into this equation. Adam Aron knows nothing about the gold mining business, something the talking heads on CNBC see fit to remind us about day after day after day. But Eric Sprott knows a lot about the gold mining business. And another thing about Eric Sprott is Eric Sprott hates predatory short sellers. He's been on the record time after time talking about how predatory short sellers are destroying viable junior mining companies and how he hates to see it. So Eric Sprott's involvement combined with Adam Aron's involvement tells me this is not just about buying a gold mine with potential, that there is some kind of an angle in this going after short sellers squeeze mentality in play. Now, another thing we need to mention here is that Hycroft Mining owes a lot of money to one of Sprott's other companies. Sprott Private Resource Lending has lent over $140 million to Hycroft Mining. So it's very possible that Sprott's involvement here, that he's taken this $28 million equity stake in this company, it's possible it has more to do with ensuring his other company gets paid back the debt they're owed. So whenever you see a major debt holder becoming a major shareholder in a company, you have to think it's possible he's trying to position himself for a favorable outcome in any hypothetical bankruptcy proceeding. Another possible angle is Sprott could see the potential in this mine and thinks it's an undervalued asset, and he also hates short sellers, and that's why he's investing. Now, another part of the story that makes it even more interesting is the involvement of Mudrick Capital. Mudrick Capital is the largest shareholder in Hycroft Mining. They own 40% of the company. Now, if you've been following AMC, you know that they have a history with Mudrick. Mudrick was the company that bailed out AMC last year. Mudrick bought $230 million worth of AMC stock, which gave AMC money that they desperately needed to stay alive. However, within a few minutes of the deal between Mudrick and AMC getting announced, Mudrick went on the air and said AMC stock was overvalued and that they had immediately sold their shares and that they had taken out a short position in the company. So that was really something of a backstabbing by Mudrick, because as soon as Adam Aron announces, hey, this company has taken out a big position in our company and bailed us out, that same company, now that all the cameras and microphones are pointed at them, they say Adam Aron's AMC is overvalued, we dumped his stock already, and now we're short. Well, that's kind of a backstab, isn't it? Now, Mudrick Capital made millions of dollars on that deal because they sold their AMC stock at a much higher price than they bought it for. The problem was Mudrick did not cover their shorts in time. And several days after Mudrick announced that they were stabbing Adam Aron in the back by shorting his company, AMC stock had rocketed to over $70 a share. Mudrick Capital ended up losing 10% of their fund's value by shorting AMC stock. So to say the history between Mudrick and AMC is mixed would be to put it mildly. Are they friends? Are they enemies? Who knows? And again, this really reads like some kind of Wall Street telenovela. Well, now it looks like AMC and Sprott are partners with Mudrick, because AMC owns 21.6%, Sprott owns 21.6%, and Mudrick owns 40%. Interestingly enough, AMC and Sprott combined now own just enough to outvote Mudrick in any potential shareholder vote. I wonder if that's a coincidence that the two combined bought just enough to outvote Mudrick. Now let's talk a little bit about the Hycroft mine itself. The Hycroft mine is a 71,000-acre open mine pit in Nevada. Now this is not a new mine. This has been there for a long time. And this mine has a checkered past. In 2015, the mine was owned by a company called Allied Nevada, and they filed for bankruptcy because they're not able to profitably get that gold out of the ground. The company emerged from bankruptcy and became known as Hycroft Mining in its current form today. That company was bought out by a SPAC, which was owned by Mudrick Capital a few years later, and the stock has just gone down and down and down from a high of $15 to as low as 33 cents last week. Now, back in November, Hycroft announced that they had laid off almost all of their workforce, that this proprietary technology they were developing to revolutionize the gold mining industry, that it didn't work, and that they had no path to profitability, and really there was very little chance they can ever profitably take any gold out of the ground. Of course, gold prices have come up since then, and it looks like gold prices are headed higher from here, so that situation may change in the future. Another thing that has to be mentioned is that as soon as this deal with AMC and Sprott was announced, Hycroft came out and announced a $500 million at-the-market offering of new shares. Basically means as soon as the deal with AMC and Sprott gets announced, Hycroft says we're probably going to dilute our shareholders. Now, I don't know if Adam Aron actually knew about this ahead of time or not. It's possible this is another backstabbing by Mudrick. Who knows? This is a very messy story. Of course, as soon as that $500 million at-the-market offering was announced, it immediately took the wind out of the sails. The stock had been ripping higher on the news of AMC taking out that position, but then the $500 million at-the-market equity offering gets announced, and the stock comes right back down, and now it's trading right around $1.40 a share, which is basically where it was before the AMC announcement. And another interesting thing is that the volume in call options in Hycroft was going absolutely ballistic before the announcement of AMC. So it really looks like somebody out there knew this deal was going to get announced and traded on that insider information. We don't know who, but it's a good bet the SEC is going to be looking into this. All right, so now that you have this ridiculously convoluted backstory on all the various players in this deal, I have to ask, why this company? Why Hycroft? Why wouldn't Adam Aron just buy gold bars like Palantir did? Why wouldn't he buy a stake in, say, Barrick Gold, another company, a well-established gold miner who's already profitable? Why buy this money-burning company? Well, again, you have to look at some of the things that Adam Aron said. First, I want to point to something Adam Aron put out on Twitter when he announced this move. He said, AMC is playing on offense again. I want you to keep that in mind, playing on offense. That implies something like a fight is going on, right? When you play offense, you're going after an opponent. But who's the opponent? Interesting. And I also found one particular quote in the AMC press release announcing this deal to be very telling about what's going on here. That quote said, "Our strategic investment being announced today is the result of our having identified a company in an unrelated industry that appears to be just like AMC of a year ago. It has rock-solid assets, but for a variety of reasons, it has been facing a severe and immediate liquidity issue. Its share price has been knocked low, As a result, we're confident that our involvement can greatly help it surmount its challenges to its benefit and to ours. And when I saw this, I realized what was going on here. All right, Adam Aron is saying this company looks a lot like AMC looked like last year. Well, what did AMC look like last year? A company that had been naked shorted into oblivion. And what Adam Aron sees here is a company that has been targeted by naked shorts the same way AMC was targeted by naked shorts. And you don't have to go too far to see proof of that. The short interest in Hycroft Mining is over 20%. The cost to borrow is almost 300%. The volume in Hycroft Mining every day is several times the float, and Hycroft Mining has been added to the threshold securities list. And if you don't know what the threshold securities list, it's basically a list of stocks that regulators are keeping an eye on because it looks like they're being naked shorted. To get on that list, a company needs to have 5 consecutive days of failures to deliver that amount to at least 10,000 shares or at least 0.5% of the total outstanding shares of the company. In other words, the big dogs are trading in shares that don't exist. And for several days now, Hycroft Mining has been on the threshold securities list. That means that when people go out and buy Hycroft shares, the market makers are putting shares into their accounts, but they're not going out on the market and sourcing them. They're in effect selling shares that don't exist that the market makers at some point in time need to go out into the open market and buy. In other words, they're creating synthetic shares or they're naked shorting. The same way when banks make loans, they create money into existence, loans that inevitably have to be paid back. It looks like that's what market makers are doing to Hycroft Mining, is they're creating imaginary shares. That way, any buying pressure in the stock can be absorbed, and they'll buy those shares back later when there's less attention on the stock. At least that's the goal. Well, what happens if there's too much attention on the stock? You can get a short squeeze like happened with AMC last year. And I think that's probably what Adam Aron is hoping to accomplish with this deal. Now, he can't come out and say that directly because the laws on what a CEO is allowed to say and what they're actually allowed to do with shareholder capital are pretty tight. But it really looks like Adam Aron is trying to engineer a short squeeze in Hycroft Mining by taking out this position, and Hycroft Mining is ripe for a short squeeze. Now, there have been massive short positions in Hycroft Mining taken out in just the last few weeks. We don't know who has taken out these massive short positions, but I have a pretty good guess, and I'm speculating here, that if you look at who has been shorting Hycroft, you're probably going to find a lot of familiar names. Names such as Citadel Securities, Susquehanna, and Simplex Trading. Names that have been naked shorting AMC for years. So if I had to speculate, I'd guess one of the reasons why Adam Aron picked this particular gold mining stock, besides the involvement of Mudrick, besides the involvement of Sprott, has a lot to do with Adam Aron trying to knock over a smaller domino to engineer a short squeeze in that stock, which could inevitably lead to another squeeze in his own stock. And again, Adam Aron can't come out and say that's what he's doing, but to me, that's what it looks like. And the clowns on CNBC and at Motley Fool will never mention that. And all of these articles that everybody has written about how AMC is such a joke and Adam Aron is an amateur and he doesn't know what he's doing, not one of these articles has mentioned how ripe for a short squeeze Hycroft Mining is. Nobody has mentioned how the same players who naked shorted AMC last year are doing the same thing to Hycroft Mining. Well, Hycroft Mining is a much smaller company. It's a lot easier to engineer a short squeeze in a much smaller company. So there's two ways you could look at this. Adam Aron is doing a rug pull. He's fleecing investors. He's robbing the apes who have invested in AMC by making a stupid bet in a company that's just taking that new position and diluting shares. And so the retail investors getting ripped off all over again. Or Adam Aron is playing 4D chess and he's trying to engineer a squeeze in this company that's going to screw over the companies that have already screwed over his company. Now, the fact that we have the involvement of Eric Sprott, who hates short sellers, who loves precious metals, with Adam Aron, who has been the victim of the short sellers for years and has vowed to go on offense, and that they're taking a stake in a company that is ripe for a short squeeze, that tells me this has more to do with engineering a short squeeze in a stock than it does AMC suddenly having an interest in getting into the gold mining business. So how does this end? I have no idea. I mean, this story reads like the script from a Game of Thrones episode, with all these different players and all these different conflicting interests and backstabbing going on left and right. How this story ends, nobody knows, but you always have to keep in mind that when the big dogs start to lose money, they very often change the rules to screw the little guys. We've seen that time and time again with GameStop, with AMC, with silver, with nickel, with volatility products. Probably how this one's going to end also. But long story short, there is a lot more going on to this story than you're seeing in financial press. There is a short squeeze element to this story. There are conflicting interests. Sprott has a dead interest in the company. Adam Aron is trying to engineer a short squeeze. Mudrick Capital has a history of stabbing Adam Aron in the back. It's possible that this is all about fleecing retail investors and luring them into a trap, or it could be a rug pull, or this could be another case of the market makers being caught with their pants down. So what do you guys think it is? Let me know down in the comments how you think this one's going to play out. Don't forget to give me a like and subscribe to my channel. Until next time, live small and dream big.